Hi everyone, I'm a 38-year-old Singaporean working a 9 to 6 job in the tech industry. On this channel, I document my journey towards a $4.5 million retirement portfolio by age 50. The portfolio sits at $559,000 so far, with nearly half the portfolio comprised of profits and has outperformed the S&P 500 over the last 5 years. I have 12 more years to go on my investing journey. For transparency, these are the screenshots of my 3 brokers. Now, I'm going to do a quick episode today to talk about how Singaporean doctors, finance bros, tech bros, or other working professionals can have a unique investing edge. You might be wondering why I specifically brought up doctors as the first profession. The truth is, recently I was attending a friend's wedding at Dempsey, and because my friend's a doctor, quite a number of doctors were in attendance, and I happened to be seated next to one. Coincidentally, this doctor also invests in the stock market, and we started talking about his investment journey. He mentioned his history investing in technology stocks like Meta. As we all know, the stock crashed 75% in 2022 and he sold out his position at a loss and felt he wasn't good at stock picking. I asked him why he invested in Meta initially and his reasons for selling. He replied that the stock price was doing well at first and many people were buying, so he also decided to buy. Then when the stock price fell, he sold at a loss because he thought he picked the wrong stock or that he failed to predict the FOMC rate hikes impact back in 2022. And when I tried to explore deeper subjects affecting Meta's business at that time, such as the Apple IDFA changes affecting iOS ad targeting or the Reality Lab cash burns, which I felt were the core issues affecting the stock aside from the macro stuff, he actually didn't show much interest. So at that point, I concluded that his thesis on Meta back then was purely on sentiment and likely FOMO instead of truly understanding the business. Strangely, when I asked if he was into medical stocks like Intuitive Surgical or ISRG, which should be right up his alley, he wasn't the least bit interested. And then our conversation quickly moved to other technology stocks like our good old Nvidia. Now, the incredible thing is this, I kid you not, this is the third Singaporean doctor I've encountered with the exact same situation, all FOMO into technology stocks. It's like, Clark Kent Superman, regular worker by day, but by night, suddenly becomes super tech investor. But the worrying thing is they don't understand the technology business at heart. It's not their profession. And I realized there is this pattern where a lot of working professionals tend to either FOMO or find thrills and opportunities outside their circle of competence. Because maybe the further the stock is from the industry they work in, the more exciting it seems compared to their day job. Because maybe it is boring to look into the same stocks and repeat what you're already doing at work. And so people start looking into exciting semiconductor stocks with lots of volatility, like Nvidia or AI or technology. And this is what prompted me to make this episode today. As the markets become more and more bullish compared to the last 2 years, I am seeing more and more of this FOMO behavior from people, professionals investing in stocks that are outside their profession, their work, or their circle of competence. Now, later on in this episode, I will show you an opposite example of a subscriber of mine that performed spectacularly in the stock market over 15 years, playing strictly within his circle of competence. But for now, I want to play you guys a recent interview by one of the greatest fund managers of all time, Peter Lynch.
My secretary, Paul Sell, says, Barbara Streisand's called 3 times. She'd really like to talk to you. And she's very nice, and I said, sure, I got some time this afternoon. So I called her, she says, I own all these stocks, and I'm getting up at 5 a.m. and looking at this stuff. And she said, I never did drugs, I never did marijuana. I just can't sleep. What do? I says, tell me 5 things you own. She named 5 companies. I say, okay, what do they do? She didn't have any idea. He's an incredibly talented person. She had no idea what those companies did.
Right.
So what are you going to do if they go down 50%?
Yeah.
If you don't understand what you own, you're toast.
It sounds so obvious to hear you say it, but it's amazing. You talk about people spend more time researching a refrigerator they're going to buy than they do a stock they're going to invest part of their life savings.
People are very careful. They spend hours to get $50 off on an airplane flight. They look at everything.
Right.
And they'll put $10,000 and some crazy stock they heard on the bus, and they have no idea what they're doing. And somebody invented this awful term before I got in the business called play the market.
Play the market. You don't like that term.
That is sometimes a noun, there's a verb. It's a very dangerous verb. Play the market is not what you do.
Okay.
You buy good companies and some work, and you have to know what they do.
Know what you own is the core takeaway from this video. If you do not first have a long-term thesis on companies before you buy them, what's going to happen is that every time the stock falls, you will immediately lose confidence because you're letting the stock price drive the narrative, not your long-term thesis driving your conviction. You need to have an anchor thesis that you stick to and consistently check if the business and the thesis is still fundamentally on track in spite of a significant drop in stock price. Now, we've seen this many times before. Companies like Meta, Amazon, they bounce back time and time again over a long-term horizon because their core business remained intact despite short-term concerns. And don't get me wrong, these professionals, right, you guys are all very smart. Like Barbara Streisand, legend of an actress in Hollywood. The doctor I met at the wedding, incredibly skilled. This doctor had a firm grip on what was going on inside the hospitals, the equipments, the processes, etc. And he was truly an expert in the medical field. So if these professionals had simply used their knowledge and focused on companies within their industry, I tell you, I think they were all what big, man. Here's an example of a doctor friend of mine who's been a surgeon in Seattle, USA for many years, and he's also into investing. So I asked him over Instagram about the Da Vinci machines, which is what Intuitive Surgical produces, a company that has been on my watch list for a while, but I hesitate to pull the trigger because I feel I still do not have an edge with medical stocks as a non-medical professional. So you can see in this conversation, right, he easily quotes companies he works closely with, like Alcon, J&J, and Glocos, all of which are publicly listed companies. Now, apart from J&J, I haven't even heard of the other two. Then he goes on to explain about the stigma that exists towards Chinese machines, something that I did not even know as a medical outsider. Of course, I don't know, right? And basically, there is this ongoing negative view in the market that ISRG's replacement parts, the revenues, are being threatened by cheaper Chinese manufacturers. And the problem is that I could never really form an opinion of whether the long-term moat of ISRG is under threat because of this situation. So over here, I was trying to ask this friend about his views, right, this doctor friend, his views on the situation. And then he goes on to explain about the psychology of surgeons in the US, where they usually don't care about how cheap the machines are and just want the best and the fanciest. And, he starts going into examples like the Chinese microscopes, where he even has a grasp of the rough price of 10K versus Zest at 200K. Then he goes on to talk about the situation in America and Europe, as well as the Alcon Phaco machines. I don't even know what the hell that is, right? And he talks about his real hands-on experience using the machines and knowing that they can last more than 10 years. So he understands all these industry trade-offs as a medical doctor. And mind you, this conversation, right, in Instagram took place under 10 minutes. He didn't Google, he didn't chat GPT. He already knew all these answers at his fingertips because all this information is well within his circle of competence as a medical doctor. And so these stocks that he talks about, he knows the ins and outs of all of them. And that, my friend, is what I call an edge. A circle of competence. Here's another example of a subscriber of mine who performed really well holding on to companies like Meta long-term without selling a single share through all the ups and downs, including the 2022 crisis. So this guy's really impressive because he works at a major MNC company in a finance position. And he says, I quote, "I invested in Meta because company XYZ, which is his company, I'm just going to obfuscate that because for privacy's sake, is one of the biggest ad spenders on Meta platforms. So his company spends a lot of money on Meta platforms, right? Ad budgets and everything. And he realized while working, right, at his company, because he sees all these numbers, right? He realized that running the numbers, the advertising spend never once got cut at Meta. Then 2022 happened, and while the markets were throwing Meta out, right, it crashed by 75%, right? His company's budget, he noticed, it never moved. And so because of that, he bought heavy into Meta. Basically, he works as a director of treasury in this MNC. And so he has this insider's view of how his company was still doubling down on Facebook ad spends in spite of the 2022 75% Meta stock crash. So you guys see, the stock's share price has nothing to do with the actual business fundamentals, which were still going strong by his observation. And that was his insider's edge that he used fully. He took advantage of it. Now, I know what some of you are thinking, at this point, wow, I need to be director or treasury or finance, then can see this kind of information and act on it, what? Guys, that is nonsense, You can be even an admin staff or an accountant or anyone remotely close to the department and you would have had the same kind of knowledge. You just really need to open your eyes at your workplace to form an opinion, observe, and then you can have your potential investments based on your insider knowledge. So this guy here, very smart. He not only observed this discrepancy between Meta's stock price and its underlying business performance during the 2022 crisis, but he also invested into other companies like FICO and SPGI because he himself manages the debt portfolio for his company. So he personally experiences the monopolistic power of these rating agencies. And he has a hands-on sense of how to react whenever bad news hits the company, and he can assess whether the bad news is short-term or long-term. So he does not, and he did not let the stock price drive the narrative. He let his fundamental understanding of the business to keep him invested long-term in the business unaffected. So all of you Singaporeans out there, whether you are a doctor, finance bro, tech bro, accountant, chemical engineer, shipping, hospitality, cao bing, whatever kuching kurak profession you're in, just remember to smell the grass on this side. The grass is not greener on the other side. Don't fall into the FOMO trap of looking for stocks outside your area of expertise. Boring investing is good investing, guys. Play where your strengths are, focus on investing in companies close to your working profession, and you will do very, very well because you will have a true, unique insider's edge because you are out there in the field interacting with these companies, the equipment, the products, the customers, the suppliers that you are investing in, compared to all the analysts out there sitting at their desk having only the quarterly earnings reports as their only source of truth. Otherwise, my suggestion is to simply invest long-term into a diversified index fund instead of being itchy backside into stock picking in FOMO land. I hope you guys enjoyed this episode, everyone. May the long-term turtle compounding spirits be with you.